Hi and welcome to another video. This is the second time I'm doing this today, so I'm going to probably keep this short because the first recording didn't even work. So let's have a look at, first of all, I just arrived back from London and it was an overnighter, so we left the flat at 10 p.m. last night and we basically got to the airport at 1 and had to wait till like 5 in the morning 5:40 before we were able to get to the gate. So a lot of hours waiting, hanging around with the kids. But London was great in the sense that we were able to show the kids for the first time, you know, the tube, travel around and see the sights and stuff. So that was great. And but I'm dead tired now, so I'm just going to make this quick. As I haven't slept since the day before. Apart from a snooze here and there on the plane and on the coach, I've probably slept like an hour and a half. So I'm due a little rest. So without further ado, let's look at the trades for today. I did have it written up on the chart to show you visually in terms of risk units, but I won't bother with that again because I rubbed it off assuming that the video was good. So this was a -1 hour trade on the Australian dollar versus the US dollar, and that didn't work, so -1 hour. Then we had 6B. This was a preemptive trade based on a higher time frame, 30-minute time frame, using my methodology and the volume and the pace and so on and so forth. This used trend placement, volume, pace, and support and resistance. The only thing it didn't use was a correction period of the 5 tools that I tend to look. Well, I really just look at those 4 tools. Very rarely I look at the 5th one. And yeah, so you can see it hit me to the tick there, bounced 1.2R in favor, came all the way against me, and then unfortunately I had to get out here for 0.7 plus 0.7R because there was some news and I wasn't going to hold through the news. I think it was non-farm, what was it? It was jobless claims. I don't know how much, I can't remember whether that's something that moves the market a lot or it moves various markets to different degrees, but simply because it's a 2-star news event, I just had to get out, and as per my rules. So that's what I did, and then lo and behold, it went to 96. I got out 82, so that's another 14 pips or 1.4 risk units. So the target was 04, but I do have a dynamic management of the trade, so targets aren't always hit. So it's to be. I would have had to have been in the trade to see what I would have done with this. And there's a certain element of discretion there. 6C, missed out on, or quite frankly, just hesitated on 56.5, wasn't ready to take that trade, and that is still working. It's 1.4R in favor as we speak. And then finally, the breadwinner, the money maker of the day was the YM short here. Again, using the higher time frame and then the lower time frame for timing, you can see the exhaustion, big green bar here, exhaustion volume, smaller green bar here, lower exhaustion volume, so that's your entry. It also had fib confluence in terms of the golden mean and stuff like that. If I bracket this momentum reversal, you'll see that that's the golden mean, which is often a point where you can get a reaction, and the higher time frame. So short there from 604 down to 584. Again, the target was much lower. It was 553, but I saw exhaustion signals here via candle and volume and support and resistance. So that trio of reasons got me out of the trade, and it did eventually bounce to what would have taken out my stop and then some, because it's quite a volatile. We've got a large average true range on the 5-minute chart of the YM today. So that was that. So -1R plus 0.7 plus 2 leaves us with 1.7R. Then after commissions, $72.71. That puts me at 5 winning days and 1 losing day so far on this combine, up $300 or $50 per day currently. Now, I did write some stuff. Maybe I should write again. Yeah, I'll pause the video and write again. Okay, so this is what I wanted to discuss. A lot of people have the idea, and I was one of them, and periodically I still am one of those people, who believe that they need to make tons of money per day to be worth their salt as a trader. And that simply isn't true. What we need is consistency. We see these people throwing around, large lots or multiple contracts, hundreds and thousands of shares if they're doing the stock thing, and they're making 500, 1,000, 1,500 every day, 4 grand, whatever the case may be. But that's not what's going to bring home the bacon, in my opinion. You need to be able to do something consistently, bring home a result consistently, irrespective of how big that may be. Now, a lot of people will scoff at $50 a day. They'll say it's X number of ticks, and if you get some slippage, and yada yada yada. But the thing is, aside from the fact that the slippage is factored into the daily, that daily number that I gave you, $50 a day, is after all slippage, all commissions, all spread, all costs. So that's the first thing. And the second thing is, okay, $50 net pre-tax profit doesn't sound like a lot at all, but we're looking for sustainability here. So it's not trying to get loads of pips in any one day, it's trying to keep getting pips over the long term. That's the way I look at it. And so I'm adopting the day's wage mindset. Yes, it looks very rubbish, $50 a day, but if I can keep that up, I can then move to point 2, scalability. Now all of a sudden 50 becomes 100, and then you move on to 3 contracts. Maybe it takes you a month or 2 to get to 3 contracts. Now you're on 150. Maybe by summertime 2018, whatever, 15 months from now, I'm on 5, 6, 10 contracts, and now I'm on 250, 300, $500 a day. Location independent, that's the key as well, because you can use GR arbitrage to make your dollar stretch. You earn in dollars, you spend in, I've probably said this before, earn in dollars, spend in baht, which is the Thai currency, and that's where I'm looking to, that's one of my dreams, to go there. Yeah, so looking at playing the long-term game, looking at scalability. It's tough to do when you sit here and put in your time and you see such a relatively small result, but that's where I'm trying to train my mind to go towards. And then chaos, that makes it even more difficult to hold on to the edge, because the order of wins and losses does have an effect on our mindset, the duration of a win or a loss. If you losing $500 over a period of an hour, while a slow bleed gives you time to acclimatize yourself to the loss. But if you click a button and 3 seconds later you just lost half a grand, it tends to sting a little bit. And I actually have lost back in the day when I was doing that crazy thing with the large account. Which, if by the way you haven't seen my video, my story, I would urge you to go back and check it out for some things not to do. And that was one of them. If you lose several $100s and you're a working class guy like me from a working class family, it does tend to sting a little bit more than if it's a longer process. And then the frequency of losses. So order, frequency, it's all about the spatial occurrence of what happens in your trading. So this is probably another discussion, a topic for another video, but pay attention. I would urge anyone who's struggling the way I am and have done more so in the past, to really drill down on the order of your wins and losses, and look at that and factor that into your decision making, and when you're going to stop, and when you're going to, what your daily target's going to be, and so on and so forth, because it really does play on the cognitive biases. So that's enough of me yabbering on. Just checking in with this video. Like it if you got something out of it, please, and please do follow along if you're interested in this type of thing. It's always good to chat to fellow traders in the comments section, and I do check out your videos as well and tag along. I have my little routine every day or two. I dedicate a few minutes to scanning a few videos, so it would be appreciated if you leave your feedback. So that's it for now, and I will catch you all in the next video. Take care.